Yo, what's going on, everyone? Welcome back to another backtesting session. Today, we are going to pull up a new backtesting sheet, actually. And I'm actually going to create a whole new backtest from scratch for the main strategy that I have been trading, which is exciting because this is going to give me a chance to get a whole bunch of new data, take the things from my last backtesting sheet that worked, double down on the things that worked, provided me RR, the patterns, the specific candlestick, how they look, and I'm going to get rid of the things that resulted in losses, caused confusion, and you guys are going to see the process all tonight. So what I'm going to do here is, I don't know, should I play music or I have headphones here? I might just play music to myself. I have to backtest with music. I don't know. I feel like whenever I backtest with music, I'm like unstoppable. Maybe like some Ed Sheeran, something chill. Something chill is needed. All right. I think I found a playlist. So pretty much what you guys are going to see me do here is I'm going to find a market. I'm going to backtest it. I'm going to input my data, rinse and repeat over and over again. And do I know what market I'm going to be trading? No, not at all. Do I know I want to clear markets and stick to my rules 100% of the time? But yeah, with all that being said, let's just find something here. This is my actual list. So like chances are this is my back test here. So I'm just gonna like do this, and then I'm going to stop at the point where I saw that this market was bullish. Just to be fair, right? Back testing is all about being honest with yourself. Said it time and time again. If you're not honest here, then you're not going to be honest with yourself at 9:30 a.m. on New York Open. That's a promise. So, really, really get over that hump of not wanting to be wrong, because the only reason you're lying to yourself is because you're scared of being wrong. And I'm telling you to stop being scared of being wrong. So I see on the 2 month here, I had an accumulation past this point here. So I know that models on a lower time frame have made this bullish push, and all I'm expecting to play out now is, since buy side momentum has came into the market, I'm just looking to continue it. Very simple breakdown here on the 2 month time frame. So all I'm interested right now is in this leg. I want to see a breakdown, which I get. Turn up my music. I want to see a break up here. We get a break up. There's an ugly wick here. I don't really care about this wick though. That's fine. Okay, boom. We get an accumulation on the weekly. So I'm going to label this the first break outside of the accumulation. And then potentially we're going to have a high right here, the first high on the weekly that we expect to be ran to continue the bullish structure on the weekly, which also continues the bullish structure on the 2 month time frame. Okay. That's all I'm looking for right now. Now I don't consider a high until I see the lower time frame break down. So for me to have a weekly high in this area, I need my daily time frame to break down below the averages and create a high on the weekly. So it hasn't done so yet. Judging from that candle, it probably does here. Yeah, so it breaks down here. And then breaks right back up. So this, I would deem this a pretty strong market only because it couldn't hold itself below the averages for too long. And right away, it came right back up. Now, I'm going to label this here. I'll go over the labels in another video. daily. Then I'm gonna put in my weekly. I'm gonna group my weekly stuff here. It's good to stay neat when you're backtesting because then you're able to go back when you're in the future and understand what kind of you were thinking at the time. So I'm just going to add all of these to groups. Very important you stay organized in your backtesting. If you're not organized in your backtesting, make that change here today. Because I'm telling you, it'll help you. It'll help you recognize what you were looking at in the past. Because if you're anything like me, especially when you're learning how to trade, sometimes you have good sessions and then you have bad sessions. And those good sessions, you tend to forget what you did sometimes that led to maybe a few great trades that you took, which is why we label or group our backtesting items. Okay. So the daily is now in this potentially bullish structure. I want to see my 1 hour breakdown, which it does here. The condition of the daily, it looks a little choppy. Like it gets choppy here, which isn't really great. But it is valid, meets the rules. So I'm just gonna allow my 1 hour time frame to do what I want it to do, which is make a break above here and then find the averages, pause on the averages, and then trade it up like that. This is really choppy. Like I just don't like how the daily's moving. It made moves up. This was clean here. Then it starts going up, down, up, down, up, down, up, down. Yeah, I'm just gonna wait for something clear, honestly. So I'm not even touching the daily until I get something clear. Yeah. So this chop action over here led to more chop in the future. And I would have taken a loss if I tried to force a trade in there. I didn't force a trade in there because um I don't know. I think it wasn't necessarily what I saw in the 1 hour. It was more so how the daily was moving. Super weird, unclear. Comes below the MAs again, which is fine because it's building this weekly high that we can expect to be ran again. Because we know in a bullish market, sell side liquidity is what's ran. So I'm gonna keep playing this out here. And then we get a big push. Big potential money coming in here, which is interesting because this push was really strong. You'll notice the cleanliness in the candles over here compared to over here. I mean, the three candles made such a big move compared to, 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 5, 6 candles that have barely shown that they were able to move previously. So this is super clean. I need to take a note that maybe when I see action like this, just to like, I shouldn't be trading here. I should just like expect sideways possibly, because that's what's probably going to save me some losses in the future. But now the daily's in a much more clean environment, which I am now interested in. Yeah, backtesting is a lot of not getting trades, which is fine because in day trading you're not going to be trading majority of the time anyways. A lot of it's going to be waiting, and that's where most people are going to get burned because a lot of people, they feel that if they're not being involved in the market, then they're not working, right? Because in most jobs, once you put in X, you're supposed to receive X, whether that's in the form of a paycheck, a congratulations by a manager or a colleague. In trading, no one's here to congratulate you, no one's here to pay you, and what's going to be required of you is to sit there and do nothing and only acknowledge the fact that you have to do nothing because at certain times there'll be nothing to do, meaning the charts aren't producing anything that's in alignment with your strategy, which means you ultimately don't get a trade. So it's kind of as simple as that. So this 1 hour high here, it doesn't look that clean, to be honest. It looks okay. If it like broke up above here and then created something, I would be interested. Kind of comes down a bit. Still looks fine. I would want to see it create an accumulation here though. And something I can buy. Stop. See, that was ugly. Big open candle comes down. Really nothing to do here. Yeah, there's just nothing to do. This would be a trade missed. So I missed this trade. But if you know that in my other system that I've been testing out, I would actually get involved in this trade because I'm working on buy stopping candles that validate an accumulation. But that's not what this strategy is, so I can't trade that, which is fine. 1 hour takes off. What I want to see on the 1 hour here is takes off, pullback, and I want to get involved somewhere here on my 10-minute time frame. Really as simple as that. Some action like this isn't gonna, allow me to get an entry. That's fine. So I really can't do anything here. Okay, so we get a little breakdown on our 10-minute time frame. I'm going to take a second and put these in a group here for my 1 hour because, like I said, I already explained the importance of staying neat in your backtesting. So that's good. That's good. These are daily. Put that in the daily. Boom. So we're good to go. Want to wait for the 10-minute now to break back up. Breaks back up cleanly too. So it breaks back up, and this is like valid. I would be taking an entry right in this area here. I just want to look at all time frames. Daily's clean. We already know the daily's clean. 1 hour is in a pretty clean environment, and the 10-minute just broke above moving averages. This is what I would deem a good trade. So I'm going to take this. I'm going to put my stop loss at 1 to 5. And I'm simply going to either take a win, loss, or break even. Okay? Pretty simple. That is if it taps me in. And it doesn't. It breaks down, which is fine. And then can't really find itself back above the averages. Yeah, it just ends up breaking down. Doesn't produce a secondary entry opportunity. So I would be staying out of this market now since it broke down. And I would be waiting for the 1 hour to turn back bullish. If you're in, okay, so we get clean 1 hour bullish leg here. Boom, boom. What we want to see next is that 10-minute breakdown. Breaks down, and now we want to see break up to signal accumulation. We get that. And then this is okay. This is a pretty good pause. We buy stop right through this high here. Stop loss under the low. And we will be ready to take a win, loss, or break even. Looks like this trade maybe does not hit my break even. So I would have been break even right here on this candle. This candle would have been my break even candle. And price actually just takes off. So my first trade is actually a win in this back test, which is cool. It's always nice to start off in profit, but the losses are going to come. I can't avoid them. But yeah, this was a pretty clean trade. I'd be out at 5R, but I want to see like how could I manage this better? Let's see. So it runs like a 6.5 before it comes back down here and potentially sets up again. It's good to note I'm not gonna stop the back test right now and like put this in my sheets. I'm gonna do that at the end. Still looks really good. I've just seen the same thing so many times. Like I know what a clean market looks like. This is a clean market. Not clean down here. Okay down here. This looks clean. I want to take as much losses and break evens as possible in clean environments. Yeah, I would take another trade for sure here. Buy stop right there. This is a good trade. What trade was that? That was 10:40 in the morning. This is Tuesday at like 3:10. I wouldn't have got tapped in right there because when I actually trade live, I always put my buy stop a little bit above. And then also this was like the last candle in the day. And I'm not really interested in getting involved on the last candle of the day. And I've never got involved on the last candle of the day. So that's just something I kind of implement in my own trading. I at least want like an hour or so left in the day because to get tapped in like that and then just have the market fail down on you like a market close and then just like gap down or up, it's not worth it. I like to give my trade a little bit of time to run after entry. Yo, if you're in the chat, like the stream, comment something if you have any questions. Let's improve. So yeah, this is still okay. It's still building something here. I would want to see like a pretty clear move, which is like this is okay. I don't know why I came all the way down here, but it still looks clean. And I only take one entry per 1 hour range. So I still have an entry available here. And I don't see anything wrong with it. This could deliver. So what I'm going to do is I'm going to put a buy stop above there. I protect the low. A lot of people are always like, oh, where do you put your stop loss? I put my stop loss under the low. And why do I do that? Because the low in my strategy is supposed to be a protected higher low. So this higher low, if it wants to deliver and create bullish structure, then I expect this low to hold, which is why if it doesn't hold, then the trail just failed anyways and it was invalid. And there's no point of me to hold on to this trade any longer down here because I would just be holding on to a trade that's fallen into bearish structure. And I'm not too interested in that. I'd rather just be out of the trade right away because the big part of this game is obviously protecting your capital. So why risk? So we get tapped into this trade here. I like it. My break even would be right here. So let's see if I get break even. Okay, so we get break even on that candle. And then I'm just going to let it play. So it looks like it's probably going to hit me at break even. Plays around, yeah, then it hits my break even. So this would be a break even trade. The 10-minute kind of goes into a weird environment here. It's like really back and forth under here. This could be the third high to run. Well, it is the third high to run on the hourly. And it still looks pretty good, to be honest. I don't really like this action. I would want to see a clear move out and then something to buy stop. This I don't like this. I don't like this wick here. That's what I don't like. So I'm gonna wait a little bit longer. Yeah. So I didn't like this wick. And I'm actually gonna take a note out of that. So these entries look very different than this entry, which I think is important to note because as you're evolving as a trader and you're screenshotting your entries, right? Because you should be screenshotting this action and saving it and putting it in a file for yourself to review later. You're going to be able to notice the difference in these three setups, right? So there's three setups in front of us. I'll put a trade indicator over potentially the third one that ends up failing, or it actually never taps you in, but it could have tapped you in, which is the point. If you were to screenshot this photo right here and write the similarities between the first two and the differences of the last one, well, like what would the differences be? What would the similarities be? Okay, so let's actually do this. Let's draw this, and then let's go similarities, and then differences. Differences. And the similarities will be for the first two, right? And differences would be for the last one. So the similarities in the first two would be, well, the price breaks down cleanly below MAs. That would be the first thing I noticed. In this setup, that didn't happen in the last setup. So price broke down cleanly below MAs. Maintains itself under the MAs. If you're in the stream right now and you're getting any value, means the world if you left a like or a comment, or even just participate and ask questions. Because I'm teaching you guys firsthand how to identify similar patterns. So when you approach the charts live, you're going to get rid of the confusing questions you have to ask yourself, whether this is a trade you should be taking or a trade you shouldn't be taking. Okay, so price breaks down under the moving averages, and then what's it do? It makes a clear push away. And just so we're all aware, these three similarities are for the first two trades. They all three reasons so far apply to both trades. Okay, so let's just keep it simple like that. Maybe we can find one more. Okay, makes a clear push away above MAs, right? Makes a clear push away above MAs. What's one more thing we notice in the first setup or the second setup that is not present in the third setup? And I'm open to, hearing out comments in the stream here. If you can find one thing, let me know. And look at the overall area. The overall area. Give you guys like 10 more seconds to type something if you want to type something. Well, the first two are less wiki. It's less wiki. Look, it's not really chopping back and forth in one area like this one is. Right? So let's copy and paste this and create now what we see in the last setup that we don't see in the previous two setups. Well, the differences that I see right away is that one, this is choppy. And how do I know it's choppy? Well, price is cutting through back and forth on both sides of the moving averages, which shows uncertainty. So choppy, and what do I mean by choppy? Price cutting back and forth. That's what I don't like to see. What's another reason the third setup is less clear? Well, price is moving sideways and not falling clearly. In the first two setups, price clearly fails the MAs. Right here, it's kind of like holding itself and doesn't know which side to go to. At least in the previous two setups, when the trend failed, it clearly wanted to fall bearish. This isn't falling bearish and it's not going bullish. So automatically I'm like, what the heck does this thing want to do? I rather trade against the trend in these areas, even though I don't advise trading against the trend, than trading against the trend in this area, because in this area, it's just filled whether you're on the right side or the wrong side. You're going to be taking losses, break evens, not even break evens. You're probably going to be taking more losses than anything. But in this area here, where there's clean downside action and clean upside action, well, that's when there's a higher chance you're going to be taking winners or break evens, either on the short side or the long side of the market. So the third setup has few key differences, one being choppy and prices moving sideways and not falling clearly. Let me ask you guys something though. Compared to the first two setups, when we talk about the moving averages, how does it look in this area here compared to this area and this area? Write it in the stream if you notice what's going on with the moving averages specifically. If you've got any value from this stream so far, like, subscribe, means the whole world. Thank you to whoever liked the stream. And who would I be if I didn't like my own stream? So I just like my own stream too. Well, the key thing when we look at the MAs is that it's cutting through price. It's just moving horizontal. Like I could almost draw like a horizontal line with the moving averages, which I can't do here because it's moving fluently with price. So MAs are cutting straight through price. So that's the third key difference in this ugly setup. The third one compared to the first two that we took a win and a break even on. And we can see why this ended up in a loss. And even if this price sets up again, chances are if it did something like this, it would end in another loss, right? Because look at the environment of these candles compared to these ones. Okay. So let's see if it actually does set up again. No, it just fails. Looks like it fails. Yeah, okay, it just fails. Now, this is important to note. So what I'm going to do is I'm actually going to actually screenshot this here. Oh, shoot. Let me, remember, guys, always be screenshotting your charts. Always be screenshotting while you're backtesting. Always actually give yourself something to study later. Because I promise you, you're going to want to look at it, especially if you're in that period of day trading where you're going hard on the studying. Okay, so yeah, that's good here. I'm going to put all this in trades, trades. Stay organized, guys. Very important because these charts can get overwhelming, especially when you're someone who likes to mark up their charts like me, right? So boom. Then we can get rid of this now. Now this is interesting here because you see we're in the third high that we expect to be ran on the 1 hour time frame to carry out this bullish structure here. But it actually has came down and failed the moving averages on the 1 hour time frame. So now on the 1 hour time frame, if you're always wondering, oh, how do I know when the trend has changed? Well, there's a few things here. One, a low was taken. So this low, even though it's a wick, was taken. And on a different time frame, it may show up as something different. It may show up as another wick, or it could even show up as like a candle, like that, right? So this is 20-minute time frame. We use time frames to view orders, though. Okay, so when the 1 hour fails the MAs here, I expect that we're going to get a period of sideways price action somewhere in this area here, where price will either then re-break back up or fail down. Let's see what happens. Okay, so price fails down. And then we'll go to the daily, and it looks like from the judgment of how deep that 1 hour came down, the daily actually has now potentially failed the moving averages here. It would or can still recover, but I would want it to recover right away. Where if it pretty much on the 1 hour or sort of the daily time frame, if this just doesn't go straight up like this, then the moving averages are going to turn sideways or continue pointing down for me on the daily, which shows a loss of momentum on the daily. So I'm going to go back to the 1 hour time frame and expect that if I want to trade this potentially bullish structure on the daily like this, then the market needs to turn around right away. Otherwise, I'm honestly not interested because it's not doing what I want it to do. And when the market's not doing what you want it to do or expect it to do, then there's no reason to get involved, right? So let's see what happens. Okay, it fails down, and now I know the daily is just too far under the moving averages, and now I'm probably going to get a period of sideways or consolidation on the daily time frame. This is how you move up and down through the fractals. When a lower time frame fails, it's creating a higher time frame pullback, and that higher time frame is a lower time frame to an even higher time frame. So if that time frame breaks down, it's just creating that structure leg on a higher time frame, right? So let's see how the daily does here. So it fills down and then it breaks right back up, showing strength, right? So I take this as a sign of strength. When the market fails under the MAs and then recovers right away, I'm considering that strength because it didn't want to stay under the averages for so long, meaning that it's in demand. Okay. So the 1 hour creates a break, signaling bullish structure, right? And then what I want to see now is I want to see a high get formed on the daily. And like I just said, for the daily to have a pullback, I need to see the lower time frame breakdown because that lower time frame breakdown like this is going to create that higher time frame pullback. Right, guys? Like the stream if I just taught you something. So let's go see the 1 hour breakdown. And it might not break down, right? That's the thing. And if it doesn't break down, then I am not allowed to get involved because the market's not doing what I needed to do in order to get involved. That's the key element of rules, guys. When everyone's hopping in the markets because it meets their rules and not yours, that's what being a trader is. It's sitting out when you know it's not right to get involved. So we get that 1 hour, or sorry, that 1 day pullback, which is shown with that 1 hour breakdown under the moving averages, breaks down below a low. And now I want to break up on my 1 hour. I get that. And look what I'm getting now, guys. I'm getting that accumulation signaled with a breakthrough, this roof, you could call it, just this consolidation or sideways price action. I got an accumulation, and now I have a 1 hour high. And that 1 hour high is now creating a pullback, which means its lower time frame has broken down. Just like this 1 hour time frame broke down to create that higher time frame pullback. It's just going down the fractals. You keep validating it by starting on a higher time frame and then continuing downwards through your time frame cycles. Okay? So 1 hour is creating a pullback. I want to see my 10-minute, my entry time frame breakdown. Choppy breaks down, breaks back up. Like, this is weird. Like, it's valid, but I don't know. Something is still. Let me see the 1 hour. You know, I will take this. This is good enough for me to take. Because if this trade gets validated through this high, then it's going to expand from the MAs. The MAs are going to be like down here, while price is like up here, already past these highs to the left. So I'm going to enter this trade and let's see what happens. It might not tap us in. It may tap us in. I'll break even at 1-to-1. I will take full profits at 5R. But when price gets to 4R, I'll move my break even to 2R. So that way, if price gets to 4R and reaches 2R before it hits 5R, then I leave with some profit. My management's a little bit confusing. If like it's your first time hearing it, that's fine. If you have any questions on the management, I can always go over it again. But yeah, I understand how someone may have just heard that and been like, "What the heck is this guy talking about?" But let's see. So it breaks down. So this trade would have been canceled because it's no longer valid. And yeah, no entry presented itself in this 1 hour, potentially higher low before price breaks down. So when price breaks down or deeply breaks down on a lower time frame, I'm looking to see if that higher time frame structure is still holding. And the biggest sign the higher time frame structure is still holding if it's on the rising moving averages or moving averages that are slanted upwards like this. Now, if you look at this, it's clearly not doing that. It's under the moving averages, and the moving averages are like on top of price, moving or slanting downwards, meaning that the average of price has been decreasing which is probably a sign not to buy the market, because why would I buy into a market where the moving averages are decreasing, right? So price breaks back up, cool, takes off, and then creates a hefty pullback. So it makes an accumulation break once again. Just going to put all this stuff in its correct folder before I forget. First, lower low, there was no entries in there on the 1 hour. So let's look on the second 1 hour high that could completely get ran. Totally possible could get ran because we now have this bullish structure and we anticipate continuations. A lot of trading is about anticipating based off the previous information that you're able to gather. And that's exactly what we're doing here. We're going to take an entry with the expectation that the 1 hour time frame wants to continue up higher. No, there's no entry here. Doesn't tap me in and then breaks down. So if it wants to set up again, then I can look for an entry. If not, then it's probably going to break down and the 1 hour is going to fail. Or if it takes off, it could totally not even provide an entry. Falls down, breaks up. Okay, right here would be an entry. There's my entry. I'm going to break even at 1 to 1. And there's nothing to do when you enter a trade, guys. There's nothing to do until you break even. Right? You're either going to take the loss or you're going to break even. And once you break even, there's only one other thing that can happen besides your break even getting hit, is you're going to secure a winner. So let's see if my break even gets hit. No. Okay, so I take a loss right here, which is good. I want to take losses because the only way you can get to the loss or the winners is through the losses. So this would be a -1. And now I can add this loss to my trading or to my backtesting sheet, which is great because the more data I have, the better. The more data I have to consider for future considerations on whether I want to get involved in a live market, the better. The market is a game of endless variables, and you have to decide which variables you want to participate in. It gets pretty choppy here. Yeah, like I wouldn't trade any of this here. It's too choppy. Like these would have been entries. Like you can enter in these areas here, but with all this prior price action, chances are if you do this enough times, you're probably just gonna get chopped out, which is why I didn't want to get entered in there. And it looks like I missed a trade that potentially has the opportunity to take off, and currently is taking off. So yay, we took a loss. We took the first loss of the backtesting sheet, which is good. One hour breaks down, creating that 1 hour higher low, which gives us the opportunity to trade the anticipation of the higher high. If you're in the stream and you have a question, just let me know. We're just chilling, we're just vibing, we're all getting better. This will be a trade here as well. So this would be a trade. I'm gonna break even at 1 to 1. It looks good. Comes down on the MAs, creates a nice little roof, that we broke through, and now it's potentially creating a. No, I wouldn't have. I don't think I would have took this. So it does tap me in, but it does fail the moving averages, which I think I would have canceled this trade. Even though it's valid, me personally, I probably would have canceled it. Because look, guys, this, the way price came down to my moving averages here and kind of like turns them sideways and puts like some bearish candles over top of them. Does that happen here? No. Does that happen here or here? No. So this is an outlier. And what do I do to outliers? Well, I either test them enough to make them something that I'm able to get involved in, or I eliminate them completely because I don't want to be in a live trading environment and have to question if this is, valid. Because if I take something like that live and then take a loss, it's going to have me going through a period or a small short-term self-doubt pattern where it's like, like, do I really know what I'm doing? Why did I do that? Did I break my rules? Why did I break my rules? Am I sure that was valid to take? Yada yada yada. So that's why I would have missed out on that one completely. I potentially would have took this one, but depending on if this, because if I'm considering this a break, so that would be like my break. I'm gonna signal the 10-minute as purple. So this would be purple. This would be the first high to run on the 10-minute. This would be the second high to run on the 10-minute. Because this does deliver. Although it wasn't a buy stop I would have placed, this structure leg does deliver regardless of the MAs looking weird or not. Which is why I wouldn't have buy stopped this area here. Because I could potentially be getting involved on the second structure high that's going to get ran potentially, which does here. And my strategy is I only enter on the first structure high that gets ran. So what I mean by that is price breaks down, creates an accumulation, makes it break up. This right here would be the first structure high. So I wanted to place a buy stop here, but I was unsure because of how the moving averages looked. Okay, so that doesn't happen. It delivers. This would be the second structural high to get ran. And I don't enter off the second structural high. It's too late for me, especially when like it wicks all the way down below the averages. Like, I don't know, just like not clean price action. So yeah, that happens and price like creates a weird candle, wicks on both ends under the MAs after creating like a pretty decent bull run up. So I'm probably just expecting the 1 hour to go like sideways here. Okay. And it doesn't. It falls down and creates a little run up. Looks extended though. But this is just trying to get multiple points of view on this by switching back and forth time frames for a second here. Yeah, like it looks okay. Like if this created like one more candle up and then came down, like I would consider an entry there. But I believe that's the rest of the data we have on this chart here. So we took 3 trades. We back tested about, let's see, started back testing like here. So in 134 days, we took 3 trades. 130 days, we took 3 trades on one asset, right? Which is not a lot. But it goes to show you how on one asset, even though it could be moving in a specific fashion, like this was clearly moving in a bull run for what? Almost a year. and we were only able to get 3 trades. Do you sometimes trade the US 30? Do I sometimes trade US 30? No, I personally don't trade US 30. But I will look at like say QQQ or US 30 as kind of like a strength indicator. So US 30 right now is kind of choppy actually right now. It just like it's failing to like break past this area here. So it's just a whole lot of back and forth. So I probably wouldn't even touch US 30 right now. But it is bullish. Like it is bullish. It's moving bullish. But no, I don't trade US 30. Yeah, I look at the QQQs as well for strength. So I know if that like QQQ looks strong on the day, and then I see an asset that's strong, it's something to like heavily consider. So if I were to now let's look actually, let's go back to the QQQ on July 28th, 2025. So let's go July 28th, 2025. Let me actually, I'm not going to replay. I'm actually just going to create a vertical line. Vertical line. July 28th, August, November. I don't know my months of the year, guys. Sorry. So here, pretty much when we were taking trades on ALHC from July 28th all the way to January, this has been the state of the market. So very, very bullish, which is good because if the overall market is bullish and we're trading an asset that's, showing the somewhat of the same side or even more strength than the market, then you're already in a good spot. Would I trade ALHC if it was like super bearish and the market was showcasing bullish price action? Probably not, because they wouldn't be in alignment. And I want to trade the QQQs, which is, a groupings of some of the like largest stocks. To be honest, like I don't even know, like I just know it's like a general strength indicator, but let's see like what is the QQQ comprised of? Let's learn together. The QQQ Trust Index State ETFs comprise primarily of the 100 largest non-financial companies listed on the Nasdaq stock market. Okay, so like Nvidia, Apple, Microsoft, Amazon, a lot of tech stocks. 52 to 64% of the QQQ is technology stocks, which, you know, we live in a technical world. But yeah. Tell me what you trade though, man. Do you only trade US 30 or do you look at other assets as well? US 30 opening drive. Oh my god, your name's even US 30, man. You milking that or what? All good. Appreciate the reply. I focus mainly on US 30 opening drive, so I'm guessing like market open. But I like seeing how others approach different markets. Good work on your back testing. Thanks, man. I appreciate that. Um, yeah, if you're just chilling, stick around. Leave a like on the stream before you go. Uh, but I'm probably just gonna find another asset and go through another back test. I have ALHC here. I'm gonna leave this tab open because I have to record all this data in my new back testing sheet, and I plan to get like hundreds and hundreds of trades on this thing. And you guys see that like back testing takes time, right? Like I'm not just sitting here like fast forwarding everything, finding perfect entries. Like I'm playing it out, like I'm actually live trading it myself. Because if I'm not practicing like how I would play, then the results aren't going to be there. So let's see. Like I just want to like find like another market. I'm just like picking stuff on my watch list to back test. But we can actually do something different. I can actually see if I can just like type in something like, let me see, like Shopify. Oh, did I backtest this already before? Okay. What's another market I know that's been decent? UUU, is UUU been bullish? Yeah, I went through a period of some bullish price action. Maybe like Amazon's been moving bearish, hasn't it? Oh no, it's been good. It was I think it's Microsoft that's moving bearish. MRST. Am I tripping? Micro. Yeah, I think Microsoft's moving bearish. Yeah, so it's moving bearish for a while. Overall, bullish, of course, but bearish in the short term. Okay, well, let's go into Amazon. Okay, so I'm in Amazon. We'll do the same thing that I did before. We will start on a 2 month time frame. Get a general overview of what the market's been doing. So it's been moving bullish. It recently broke down above moving averages, and then it's making a leg higher. So I anticipate, since this is a lower time frame to a higher time frame, meaning that there's always going to be a higher time frame than the 2 month, that this model here, where price moves upwards and then breaks down and then back upwards, is creating a higher time frame structure leg that's currently delivering. So I'm going to do this, wait for a breakdown on my weekly. Just gonna wait till I get it. Got it. You got it. It usually does, right? Price never just goes straight up forever. What's bound to go up must come down, which isn't something you always want to abide by in the short term. What's everyone doing tonight, man? We just chilling, getting better, or what? Okay, so the weekly broke down and then breaks back up and creates that first bullish structure point past the accumulation that we could potentially trade the anticipation of, meaning the anticipation that this higher high is going to get ran as per usual, because that's what we're always trading on the channel, the anticipation of higher highs. Weekly time frame. Daily breaks down. Creates an accumulation break. Creates this first higher high that we are going to trade the anticipation of, as always, which is the anticipation of that higher high on the weekly. If anyone wants me to break down a chart, just let me know. I'll stop this whole backtest to break down a chart for you right now. Something you're looking at, anything. Let me know. Because we're just having fun getting better, right? That should be the motto. We just having fun getting better. That's fire. No one can tell me that's not fire. 1 hour time frame breaks down. Let me group this up into my daily stuff. Then I want my 1 hour to show strength out of this sideways action here. We get that. We get that right here. Right? It doesn't really matter how you draw the line. Sometimes people, sorry, My timer went off here. Sometimes like people stress out about drawing lines. Like there's no perfect line to draw. You want me to tell you guys why support and resistance, or even worse, demand block and supply block traders who just set like sell limits all the way down here, and then once price like goes down, taps it and then takes off? You want me to show you why that's a myth? I'm gonna break it down. If you're in this, actually take this in. If you take a horizontal line and you just let's put a couple on. Let's do one down here. Let's do one over here. And let's do one over here. At some point, all these lines are going to look like they tap perfectly, priced perfectly somewhere. Watch. So we gotta start at this one. Okay. Price comes down, makes a push up. There's you'd call it support here. And then oh my god, price bounces off support and goes and goes and goes. Or if you go to the next line, oh my god, guys, we caught a reversal. We caught a reversal right here. We had a buy limit set right here, and we caught it. Oh my god. Wow. Okay, let's delete this one. Let's go to the next one. Oh my god, guys. I had my sell limit right here, and I caught 15 pips. I caught 15 pips right here. So wherever you draw a line on the chart, it's always going to tap price somewhere, and it's going to look like price obeyed your line. So that's why, be careful what people show you online, because anything can work, right? But don't get stuck into the idea that there's something magic that's happening. It's all just random price action that follows some sort of, I guess, continuous plan where it has to repeat itself over and over again, but it'll do so in different ways. And every time it does something or completes the cycle of price, most strategies in a clean, clear environment will look like they play out and work. Easy as that. Okay, so we got Amazon here. We get sideways price action on the 10-minute, meaning price halted itself, it paused, but it did so in a more clean way. Like it's still like kind of on the moving averages, but it's moving sideways and creates this accumulation above all these highs in the middle, and then creates something, the start of a bullish structure leg here that has the ability to continue out. And I'm going to trade that continuation anticipation, assuming this 1 hour wants to take off. So we go back to the 10-minute. I'm going to place a buy stop right here. Price fails down, never taps my buy stop, so I delete that. And then the 1 hour completely fails the moving averages, meaning that I'm no longer interested in this market as soon as it breaks the moving averages. Why would I be involved in a market that can't even hold up the 10 or the 20 moving average, showing weakness? There's too much sell side pressure. Now this is like a choppy leg, so I guarantee if I go inside this leg here, the lower time frame is going to have deep pullbacks, something like this, which is choppy. Because I'll tell you why it's choppy. Let me put that back on the screen here. It's choppy because if you're getting involved anywhere here, price is pretty much always hitting your break even, if not tapping you out for a loss, depending on where your stop loss is. So it's not bad. Like that pullback's okay. This is deep. That's okay. So it's actually not as bad as I made it out to be. But yeah, something to consider usually if you see like an impulse that's not the cleanest. Usually clean impulses like have imbalances. Like I don't trade imbalances or nor do I care about them, but I do notice that a lot in like clean clean impulses. Just through my own testing. Um this might have been an entry here that I have to be honest with myself about. So give me 1 second here. No. No. This is just action. I wouldn't have placed the buy stop here. I like to see a high. So this would be my high right here. And then I like to see a low get taken afterwards. And I don't see any low get taken. It's just increasing. That's something I've talked about in a previous video. It's called like a 3 candlestick rule. Where on here, I'll go back to here where I actually had an entry I can show you guys. Because this is going to make sense. Let me go to like just my winner. Just because like it's winner. So my first candle is a high. So this candle right here I'm hovering over is a high. And then I need a low. So this candlestick takes the low of the high, the candlestick that made a high. And then on my third or fourth or fifth, like any candle after the second candle that takes the low, or whatever candle takes the low, that candle has to validate through the high. So that's like kind of a deep dive into my 3 candlestick rule. Yeah, if you have any questions on that, let me know. This is like choppy. I want to buy stop this. Let me see. That's how the trade would look. I mean, I could buy stop that. It's actually not bad. This MMB is just not clean though. So yeah, I'll skip. Gonna make a note of that. I noticed that as I progress in my trading, I become pickier and pickier, which I think is a good thing. I think you want to become pickier and pickier. I would buy stop this. We have a high. Next candle takes the low, and now my third, fourth, fifth, sixth candle needs to validate. Mm, no, fails down. I was gonna give this a chance because I like kind of held the MAs, but ultimately failed down. Did it gap down? No, okay. Price still right there. But yeah, 1 hour is ugly. Clean, clean, failed, ugly. So this is one of those highs where like bullish structure still looks like it's holding, but like it's unclean. And I would only consider that because once this candle failed, it pushed back up right away. If there was another candle like under here, under this area, like something like this, then I would have just considered it an overall like break of structure. So if there was like another candle like this, showing a clear break under the moving averages, this isn't as clear as I would like it to be considered like a breakdown or a reset, which is why I'll just let it play out as a continuous structure. And now I just want to see this pretty much. There was an entry there though. Just wasn't like my type of entry, which is fine. Maybe if like situationally, I might have taken that. This is like this is ugly. I won't even trade this market. This is wiki. I just won't trade this market. Like I'm just unsure about this market. Like look at all these wicks. Like chances are if I enter, I could wick down again, then go, and then say the moving average just come up like that, and then it wicks past down again and hits my break even or something like that. Like I know that's kind of like fear mongering on my trade, but that's what I expect in worse conditions. Worse conditions. It has on the like on the plus side, it's moved out of kind of like all this. It's just not clear. I'm not taking this. And me not taking that led to me not taking a loss. Good. Not that I'm scared of losses. It just would have been an unnecessary loss based off the characteristics price was showing me at that time. I should be able to judge whether an increased chance in a loss could come into fruition because of how the market's acting. And now on this next leg, if we get like somewhat clear action here that's like under the MAs and then it breaks up clearly, has potential to hold, then like I would take another trade again, even though this action over on this side was ugly. But if it does show any signs of still being unclear, then I just simply won't touch it. I wanted to see this go sideways for longer, but try on the averages. This is like it's not clear. Yeah, like that just like wasn't clear. I was unsure. I'm not gonna lie, I was unsure right here. But now it's actually like doing something that is somewhat in line with like clear price action. But to be honest, guys, I'm honestly tired of talking. Give me a sec. I'm just gonna grab my other phone. Breaks are good. Let's take a break. There's been a pause in the broadcast here, guys. Trying to make a post on my story here. This might take me either 10 seconds or 1 hour. 10 seconds or 1 hour is very accurate. Okay, I am gonna end the stream here. Um, what you guys saw me do today is backtest ALHC and Amazon. On Amazon, moral of the story is price was acting choppy. It's provided no trades for me so far. Over the 13 or 14 days we've been watching it. But on ALHC, in about almost 200 days, we got 3 trades, one being a winner, one being a break even, and then we took one loss up here. So yeah, I hope you guys enjoyed the video. If you guys haven't, check out some of my other videos. If you guys made it to the end here, you're a real one. You're a real one. Like, I don't even know who's gonna make it to the end of this video. I don't think anyone will ever make it to the end of this video. And if you made it to the end of this video, and you're the first person to ever make it to the end of this video, DM me right now. At DayTraderBad on Instagram. DM me. Okay, peace.